One, two, three. Hello, hello, hello. Come on in. See everybody coming in here. Let everybody in. We got Craig, we got Michael, David, Gideon. Good to see you all. Welcome in Tuesday afternoon, evening. Chime in the chat. Hello, hello. See some cool faces coming in.
Hello.
We got Andrew. Happy Tuesday. How's everybody doing today?
Good to go.
Beautiful. Everybody have a decent 3-day weekend, or if it was a 3-day weekend or not a 3-day weekend for you. Beautiful. We got Andrew and the guys just driving in the truck. I'm loving it. It works. Just don't kill yourself, you know? It's all good.
Hey, got to get around. I have my property in Navarre, Florida. I got to go check that out. Now I'm heading back home to St. Louis. So paid for this. We're not missing it.
I get it. I get it. Vincent, good to see you. Awesome. Everybody coming on. Perfect. Yeah, so we'll go ahead and get started. I'm going to let Rochelle in here real quick. Yeah, so let's chat about some wins and some losses or some challenges for this last week. And then I'll get into a little bit of housekeeping stuff. I do want to update you guys on, and I don't know if you've seen any of it yet, but let me see. I can do have a little video to play for you. If any of you guys want to, come on out, it's all included. Join us. Got Mark. Stand by. Got events. All right, here we go. Let me play this for you, and then hopefully you'll be able to hear it all. And then, yeah, would love all of you to come out to our first kind of networking workshop event in Las Vegas, about, 67 days from now. So let me share the screen, and I'll play this little fun little video for you. I'd love to see you guys out there.
Yeah, thank you.
We have a few strategy. Do a deal like the entire capitalistic system is banked on movement of money.
But I have one client who only buys.
Go find 3 other deals that you want to see.
That's a great place to be from an investor perspective.
Almost 15 years at sea, got into real estate.
I don't have any experience with raising capital. I don't have any experience, anything else to do with multifamily properties.
And the reason why it works is because you're going to provide.
Investing was something that I always looked into, and then came across your thing, and I dove into that.
What I'm going to do is kind of show you the high level of analyzing a deal.
I am deeply rooted into real estate. I wanted to scale my business into multifamily, and that was when I ran across Justin.
This is pre-market. I did exactly what Justin said.
I'm glad that we did this.
I really appreciate all of this. This is awesome. It was great. I'd love to come back again.
That's valuable stuff.
You've had a great panel so far.
It's been great. Exactly why we joined.
So yeah, we're having it at a place, I don't know if you guys know where the Durango Hotel Resort is at, about maybe 15 minutes off the strip in Las Vegas. But if any of you are interested, obviously you get your VIP tickets to it as part of the community and mentorship. And it's really for networking, mainly for you guys to come out on November 6th through the 8th. November 6th through the 8th. The real event for the in-person will be the 7th and the 8th. But yeah, it's going to be awesome. So if you guys are around and want it, I'll send you guys out the links, and then you guys, your free tickets and all that stuff. Any show of hands of anybody that would want to come to that in Las Vegas, Nevada? We're trying to keep you out of the casinos. Out of the casinos, guys and ladies. I get it, but we got to make sure that the money goes into apartment buildings and not to build the casinos. That's a key component. But yeah, I would love to have everybody out there for it. And like I said, it's all included. And then we will do another one in probably Charlotte, North Carolina, and that'll be in Q1 of 2026. Q1 of 2026. But first one, Las Vegas, Nevada, super central for everybody to get into. And then I'll let you guys know the location. It's there at the Assembly. It's a really cool spot. It's got a great little kind of classroom workshop with all the TVs and everything. And we'll be running a live stream, nationwide. The whole purpose is to have you guys there for the networking side for yourselves and for the community and everybody involved that kind of wants to connect on that. So beautiful. Yeah, I'll put in the link here. I'll probably send it out to all of you and give you guys the code, the coupon code. So it's freebie for all of you. So you'll just have to let me know. Awesome. And then starting, I believe it's this Saturday, it's a 7 a.m. Pacific time call. So it is early on Saturdays, but it's going to be a 1-hour call for those who have had a deal or who are in a deal. Had a deal or in a deal. A little more detailed. So I'll send out those links, put them in your portals, and I'll have the teams do that. So if you already have a deal or if you're in the middle of a deal, it's going to be designed really for that, because you're going to have different sets of questions than if you're just in the beginning phase of getting a deal. Make sense? So just FYI. And we'll be having those every single week moving forward on Saturday mornings. So that'll be for that specifically. And then also what we're going to be adding to it we're going to start with once per month, and we may end up going to twice per month, is twofold. You're going to be having a call, an hour call, focused really around the mindset game. And then additionally into brand awareness and branding. Like for many people, they don't like to see themselves on camera. They don't like to be online. They don't like to do any of that stuff. But part of just connecting and raising money and meeting people and capital and all that is to have some presence online. And so some of you will, dig into that and want to figure out, okay, how do I, put a little bit of a brand online? How do I do some social media stuff that would help raise money? How would I put myself in some videos that then would be put out there to investors who then want to invest with me and give me money to go buy apartments? So that's the whole purpose behind that, is to kind of find your authentic voice and to get you comfortable with that. Should you want to do that? Don't have to, but should you want to, it's there for you. And then establishing a mindset around that, which I think is really key. So we'll be having that once a month. That'll be recurring, and then we'll probably put it on twice a month. Would that be of interest to any of you as well? Yeah, just kind of, trying to find your voice, because everybody has an authentic voice. And it's not trying to be something you're not or present something you're not. People connect with people. What you will soon find out, if you're dealing with anybody that wants to give you money to buy apartments, is, the deal's cool. And making money on deals are cool. And I like to look at the numbers, and the numbers look good. But if I don't trust you, it's pointless, right? If I don't trust you, it's pointless. So that authentic voice is really important, because people will resonate with you as a human being. And so just kind of how do you bring that out, right? If you're shy about that. So that's what that whole thing is about. So awesome. Well, I did want to make sure. Cool. I'm going to pull up a deal real quick that Victor had brought. And I'm going to show this to all of you, and then I'll bring up the numbers and we'll kind of walk through it. But before we do that, anybody want to talk about any wins this week? Do not be shy, please. You're all shy. I'm not letting you be shy. I'm going to start calling people.
Hey, Justin.
Awesome. We got Bruce and Roy first.
So I put in the LOI last week on the deal that we looked at last week.
Yeah.
They were asking $1,030,000. It was below a 6 cap, which things are selling at a 7. The broker responded to me when I submitted it saying that they had 3 full priced offers I sent him a message today explaining to him why my offer, what the details of my offer were about and why I submitted it, which was about the fact that I offered a full point better than the 7 caps that things are selling for. And I offered the owner to carry less money than he was willing to. And within an hour, I got a response from the broker asking me if I would revise my price to get closer to their asking price.
That doesn't make any sense. If they have 3 offers at asking, why do they need yours anymore?
Exactly.
Just curious.
So I was hoping that after this might be able to have a little bit of a chat on that.
Yeah, and I wouldn't even stick to the fundamentals. I mean, because if he has 3 full price, it's not like he has 1. If he has 3, then you're not even in the best and final mix. So why is he even asking you? That doesn't make
a lot of sense.
Yeah, it's called bullshit, is what it's called.
Sure.
That's what it's called.
I thought as much.
Yeah, that's called smelly. Called smells. But that's okay. I mean, that's, listen, I would stick to the fundamentals of the numbers. It's really that simple. And I would respond back to him with, listen, you show me where my numbers are wrong, but I have to stick to these. The market is what it is. The interest rates are what they are, and the rents and the expenses are what they are. So, and remind me of where this one's located again?
Conyers, Atlanta, which is about 20 miles east of 15, 20 miles east of Atlanta.
Yeah, that's right.
It's a good small little submarket.
Yeah, but nothing is selling. I mean, listen, Bruce, you can go into Southern California in a very tight market and get a 5.5 cap.
Okay.
So why on God's name would you go into Atlanta, Georgia and get it?
Yeah.
And I can guarantee you'll have massive appreciation on that 5.5 cap in San Diego. So why would you do that in Atlanta? So, I mean, the broker's smoking some good juju, and, they need to, I don't know what they're doing, but that doesn't make any sense. Yeah, I would just stick to the numbers. I mean, that it is really that simple, and just keep it very professional, and say, listen, this is where my offer's at because the numbers are there for it. And that's as far as we can move.
And what I offered, and I didn't spell it out like in your face, but the fact is my offer is a premium over what stabilized properties are selling for,
right?
Because this one has such significant upside.
Sure. Yeah, which makes sense.
So, okay.
Awesome. Yeah, I would stick to the numbers.
Got it. Thank you.
And then Roy.
Yeah, so I just got back last week. I was in Kansas City for 10 days. So it went pretty well, meeting with brokers, kind of meeting with a couple of property managers, a couple of guys that I think you probably used to. So I met with Nick and Kevin.
Oh, you did? Cool.
I did meet with them. They showed me a couple properties. Again, some of the, they're showing me stuff that the cap rate's in like 5%, the price, and I just I could buy something in Hawaii for a 5 cap almost.
Sure. Yeah, and they know better, because everything right now in that market is a 6 cap.
Yeah.
We just sold our building for a 6 cap. And just to give you perspective, we actually did put one of our other deals in Kansas City into escrow.
Okay.
Completely off market. And the reason it's off market is because it's kind of an interesting story. Does anybody know who the De Beers family is?
Yeah.
Like De Beers Diamonds?
Yeah.
So they happen to own the Academy. I'm sorry, not the De Beers. Hellsberg. I don't know why.
Okay, I heard of it.
Hellsberg Diamond family. Same thing, not quite as big, but pretty big. Anyhow, they own the Academy right next door to this property. And they've been hounding us for years about selling it. And we just, nope. And we were going to go to market with it next year. And we gave them a shot and just says, hey, we're going to give this to you as a preview first look before we go to market. And they decided to take it. And they don't even, the craziest thing about it is they're going to turn it into their Academy. They're going to expand the Academy.
Is it in Midtown?
Is it in Midtown? I think it is like near Brookhaven or Brook
Okay.
or
Yeah,
something.
yeah.
But yeah, they want the property vacant.
Yeah.
Yeah, they want the property vacant. So obviously we're not going to do that. They can do that after they close, but they're just going to turn it into an academy and expand it. But a very kind of unique situation. That's not always usually the case. But even that was at a 6 cap.
Yeah.
So yeah.
Yeah. The good I did that that deal that we in the North Kansas City. I went to go look at the property. Everything's that I'm co-GPing with them, that I raised some money for them with that. That one's coming along actually pretty good. Yeah.
Yeah, and I love the chats that are going on in the chats. We're seeing them and responding to them, and I love people collaborating because that is ultimate game is the money side, right? The final deals, the money side, the collaborations, the capital. So definitely keep that up. We love seeing that, and we'll be chiming in on that stuff as well. So very cool. Anyone else, real quick, before I kind of jump into this deal? Okay, cool. Yeah, let me show you this one, and this one is just one that Victor's working on, and it was getting reviewed today and stuff. This is I think it's a 49 unit, if I'm not mistaken. It is I'm going to pull up the financials. Yeah, it's a 49 unit, but I mean, potentially a great deal if he gets it at the right price and stuff, but he's getting ready to write the LOI on it. This one's in North Carolina. I don't know if any of you guys have looked at this thing, but it's a pre-market one with Marcus and Millichap, but this is their OM that's here. And it's a combination of studios 1s and 2s and a couple 3s. Has some renovations to it. It's in the outskirts of Greensboro, by about 90 miles outside of Greensboro, North Carolina. But there's kind of the map on it and stuff. But interesting deal, interesting property where you can go in there and put in about $5,000 to $7,000 a unit. Bump the rents $100 to $250, and it can cash flow pretty nicely. So it's a good little value add potential there, and it's a growing little suburban market. So this one was pretty interesting when he was looking at it. Let me show you the financials on it, and then we can kind of walk through that. So that way, when you guys are looking at your deals, and I'll try and zoom in on this. Cool. So, I mean, they're asking obviously over $3 million for it. He's kind of backing into this 2.9 number. He's probably, and it's an assumable loan. So the good news is that this is assumable. He's going to need to put, I think, 36% down. Maybe 35%. Yeah, it's like right around there. It's like 35.5. It's right in there. But he's going to be able to do an assumable loan and get that loan amount against the debt. So it's pretty good, about 65% loan to value, which is pretty nice. And then he's got everything else in here: closing costs, his unit mix, current monthly rents, and then he's planning to take them up to here depending on the unit type after renovations. One thing that had to happen in here is, and we adjusted this in here, this number needed to be closer, I think, to like 36,000, which this would have to be adjusted here to make sure it's being read off correctly, because that's where it should sit, right around $700, $750 per unit per year. And then he needed about $10,000 here. And that would get him in line, because I said that, your expense ratios on a 1968 building, because that's what this is, it needs to be at least north of 40%. And so this is kind of what it's going to look like. But I said also what you need to look at is, if you're going to be taking on this building, where they're saying this thing is operating at, there's just no way. There's no way they only have $5,800 in repairs for a 49 unit apartment complex. It just doesn't work. So what you're going to need to do, and what the bank's going to do when they go to give you a loan, because they're going to look at these numbers and go, this doesn't make any sense, is they're going to want to go off of something closer to this. So what you would do in this scenario is I would take this $159,000 down here, and I just would want to see what this thing looks like. So you see how this DCR down here is at 1.75. I would change this number. I'd come down here, and rather than that thing equaling, it equals K13 right now, is I would just change that and make it be K30 32. So that way it's 159,000. Oh, there's a low. That's what I did. My bad. Hold on. Let's go to here. That's why I was looking at the wrong number. So this one needs to equal that. Negative that. So that way I can get an accurate look of, okay, with the current rents, the way they are today. If I buy it today, the rents today, and then with expenses on where they're probably going to really be at, not kind of what they're projecting, which is just way off. It's definitely going to be closer to here. This is what it would look like, and it still works, right? 1.38 on the debt coverage ratio. That's way above the 1.25. And then we're going to be taking it on over to here. So it's going to be even better later, but at least I can get the thing financed here. Okay. And then you have this amount of money down and all this other stuff. The deal can work. Now he's going to have to adjust the price because these returns aren't quite there. They're close, but they're not quite there. So I come in here with all else being equal, meaning interest rates are what they are. He can get the assumable loan. He's got 36% down. He's got expenses and revenue where they should be. Then the only other thing that can move is price. And so I had suggested, I think, a 2.8 number going in with an original offer at 2.8, which would really pump these numbers up pretty nicely. And then maybe pushing that thing up to 2.850, on the offer. And yes, it's below what they're asking, a decent amount, but that's really where this thing needs to sit, right in that pocket, with all the numbers being what they are. Any kind of questions that you're seeing on this that you may have, and does anybody want to connect with him and combo the deal on a little 49 unit in North Carolina? Especially when the total capital in, I mean, you're buying it for $58,000 a unit. I mean, or $59,000 a unit. So it could be an interesting one if people have interest in it. So, but yeah, this is how you would underwrite it. Any questions on the underwriting that you're kind of seeing on the screen?
I have a question.
Yeah.
And this is just because showing how new I am to this.
Yep.
Where it showed like the cash flow a little bit below down here.
Yep.
And it showed like cash flow right here showing 61,000 or whatever. Is that a month?
Nope, that's per year.
Per year. Okay, so this is per year after all the expenses. This is
everything.
What? Yeah.
That's
okay.
That's net of your loan. That's net of everything. And then I think we even have Victor coming in right now into the call. So Victor, if you're coming in, I'm showing the deal we were chatting about. Just kind of giving people a high level of underwriting and looking at something like this. If you wanted to chat about it, please chime in.
No, not as of yet. I'll listen to what you have to say.
Yeah. Cool.
Okay.
But yeah, this is kind of a pretty cool little, and we're looking at deals all the time and stuff like this. But yeah, if anybody wanted to reach out to Victor in the chat and connect with him, he's down in Florida. So I connected him with a few folks down in Florida. And then if any of you guys want to connect, because he's doing Carolinas, even at the Georgia market in Florida market. So kind of that southeast. Got that, and I got that. Cool. Yeah. So on this thing, Liam, with this, what you're talking about, it makes some sense. So this number is net, right? This is a net number, right? Which actually gets you to about, a year one cash flow of about 6%, but it averages out around 7 and some change, which is pretty good, right? If you can get north of 7% cash on cash, that's pretty good. And you're sitting pretty healthy with your IRR. You're at a 6 cap, which is very reasonable for that market, especially as things start to compress. So you'll be in a good spot, on that deal come around. And rates are starting to drop. I mean, you guys are seeing it on mortgages, on residential, and it's starting to move down. I mean, right now you're at like 4.2 on the 10-year treasury, which is good. I think if my intuition's right, we may get a rate cut here this month. It's a decent chance. And then you may get one more before the end of the year. My instincts tell me, based on everything I'm seeing and the data that's starting to flatten out, you know, a lot of the Sunbelt market states that have been getting hammered for the last several years, you know, they still have another year ahead of them of some rougher waters, but we're turning the curve. I can tell you that right now. Like Texas, they're turning the curve. We're seeing rents flatten out, which is the first sign where they're not dropping anymore. You're starting to see things, you know, occupancy start to squeeze up a little bit. We're starting to see even here in September, which typically starts to slow down, we're picking up on leasing because the inventory is squeezing. You know, so I think 2026 is going to be an incredible year. In buying now and in this next year are going to be awesome, because you're going to be kind of at that precipice point where you're right at the bottom end of that curve as we start heading back the other way, and interest rates are going to come down, and you're going to get these rates down into the fives, and it's going to start to be real healthy where things are going to trade. So very optimistic about that, just so you guys know my thoughts on it. And I'm looking at data all the time. So and just from what I'm seeing, things are going to be good. And it's also our 250th birthday, you know, here in Americana. And we also have the World Cup coming into the United States. So there's a lot of big things happening next year that are going to really drive a lot of things in the country, financially and everything. So keep that in mind, because it's going to be some great opportunities to jump in on some stuff. Cool. Any questions on kind of what you're seeing here on the screen on kind of how I looked at this thing? But this, like, the big notable on it was kind of the expenses.
May I ask you a question?
Yeah. Yes, Miriam. Yeah.
Could you go to the next sheet for the IRR? Yes, here shows that the cash on cash return for the first year is 3.28%, and the other years is more than 7%. So am I right that I see here that for the first year, the return of the investment is 3%. So in order to go for the 7%, we need to repair and change the lease contracts, right? So
correct. Well, you're going to do two things. You're going to renovate the property, because in this case, in order to get those new rents, you need to do some improvements. So you're going to be renovating the property, then increasing the rents. That's correct.
So if there is a time deadline for the lease, so we cannot force them to leave the property, yes, because we have to check the lease agreements to make sure that we are able to do this stuff, right?
Correct. Yep. So what'll end up happening is during your due diligence period, you're in your due diligence, that first 30 days, you're going to do what's called a lease audit. A lease audit. You'll get copies of all the leases.
Okay, gotcha.
And you will, and they're going to have expiration dates on them anyways through your rent roll. So in that process, knowing that you need to renovate, you're going to see when do lease expirations come up each month. And that's how you're going to set up your renovation schedule. Does that make sense?
Yes, that's exactly what I was thinking. Yes, that's exactly what I was thinking. But in order to return back to the investors, when we go for the syndication and we present to them that we give them between 7 to 9% annually return, and this first year is 3%. So how we can cover that? Because the other years also here shows that 7.90, 6.87. So if we want to go for the 7% to all years to the investors, so it doesn't show.
Yeah. Yeah, so the way, so kind of seeing this deal.
Because 3.28% with difference with 7% is 4% difference. So if we go the first year, we pay the investor 7%. So we paid from out of pocket 4% extra. What's gonna happen?
Yeah, you're going to accrue it, right? So it's very, very common, and most investors know this, that because you're doing the renovation, the first year is always the toughest. Okay, so you're not required to pay that preferred return. You would accrue the return. It's due to them. They're going to get it, but you would only pay out a small portion. You would accrue the differential, and that differential would come out in the next coming years. Okay.
Yeah, but the other years also is just 7%. There is not so much over that.
Yep. So what's going to end up happening? Yep. So what's going to end up happening is you'll pay them, and you won't do 7, you do a 6% preferred return on this deal. But 6% preferred return that would get paid to them. And then you're going to end up doing a refinance. Okay. And in that refinance, you'll do what's called a catch up, right? Where you'll pay them out their preferred return to catch up, hence the word catch up. And then any additional money to pay them out part of their equity, their initial investment. And that would happen right around here, somewhere in here. Okay. And so you would accrue this, you would pay this, you would pay this. And then at this point, when you do a refi, if there's any preferred return that's due to them that has been accruing, it would get paid out at that point. Does that make sense?
Yes, just I think before that, I was talking with another investor. Maybe it was my mistake that I told them that, okay, we're going to give it between 7 to 9% annually return. So it's not something that, how can I present this time?
Correct. So when they ask, hey, like, what are the projected returns on the deal?
Yes.
The number you would give them would say your projected returns are about 16 to 18%. And I always give people a range, right? Because it can change, right? So I would say your projected returns are 16 to 18% per year, right? And they're going to say, well, how is that, put together? Well, some of it's cash flow, and then some of it comes from the appreciation of the building.
Okay.
And then that's kind of the high level of it. And then when they get into the pitch deck, right, where it's actually walking them through and explaining how it gets paid out, that would answer the questions as to what comes from the cash versus what comes from an appreciation when you renovate and then you refinance, right? Or you renovate and then you sell it.
Okay, gotcha. I think, yes, I was confused a little.
Yeah.
Because I always look at the interest more than this number in other deals that we received, and I always looking for 10% average. In the average, I was looking for 10% because I was worried about how to present to the investors.
Yeah. Yeah, and that's great. And you just let them know, your year one is going to probably have an accrued preferred return. It's still due to you. It's still owed. You're going to get it. It's just when that gets paid. But they'll get some cash flow, and then years 2 and beyond, we get a lot better.
I understand. Okay, thank you.
But at the end of the day, right, they're going to annualize this thing out at around close to 17% a year on their money. And then they get tax benefits and everything on top of that. So it's a pretty healthy deal at the end of the day.
Okay, good. Thank you.
And I saw Twyla there as well.
Yeah, my question was, one of the properties that I wrote last week, the seller had said they paid the water expense, but it wasn't in their financials. So I looked it up, added what I thought was fair for the area. I was curious as to what made this one jump up. Was it something similar? Because I noticed on the utilities on this one, $4,000 jumped to like 14 grand. So just curious if, oh, that was
they're not even showing, the utilities may be metered at the property. So it's very possible, and I'd have to, I guess, if Victor's on here, but it's very possible these things are being paid by the tenants directly.
I guess I was talking about the contract services on this
one.
What made those jump up? Just that's what it should be. Is it were you plugging in numbers to get to 41? Or is someone else seeing that people are leaving things off those initial?
Yeah, in this case, they were probably leaving things off because you would probably have $6,000 alone in landscaping.
Yeah.
right? $500 a month in landscaping on a property like this. I'm just looking at the grass and the areas around it. And then you're going to have, if you get into some snow and stuff in the wintertime there, potentially. But yeah, you would have that. And then you're going to have other stuff on that property as well. So
Gotcha.
this is probably not too far off in terms of that number. Yeah.
Thank you.
Yeah, you bet. I know that there's a couple other hands up here. Did I miss a couple hands? I got Bruce back.
All right. Maybe it's a silly question, but it appears that your vacancy and credit loss in the current is sitting at 0. And I wonder if that's intentional. And if so, why?
Yeah, so great question. It's 100% occupied currently. And they're paying all rents and there is none, right? Technically, but that's because the rents are so low. So that's going to change when they begin to raise rents and renovate. So he went from 0 to 10%, which is more in alignment with reality, because nobody's leaving and they're paying their rent because it's low. So once it starts to boost up, and I think he's going to beat these numbers, quite honestly, but until you really dig into it, he's keeping them conservative. Yeah.
Okay. Thank you.
Yeah. Awesome. But yeah, this is a great little kind of example deal when you're underwriting, just to kind of see some things and how you would underwrite as well.
Justin?
Yeah.
Hey, quick question before we move forward is when you look at, because of the date being September, 2025, you've only got a very limited window after you close and et cetera. So you're probably into October, November.
Yep.
Do you just, can you discuss, maybe when one that's not quite this tight, maybe you have a quarter left. How would you, position that to your investors?
Mm-hmm. Yeah, I would be trying to close this thing before the end of the year, 100%, because that way they can get their taxable bonus this year too. Same calendar year. Yeah. So here being September, you have 4 months, plenty of time. And it would be great from a raising capital standpoint, because I would go and get a cost segregation study done, almost even you can get a pre-report done from any of those vendors that are in your system under cost segregation. They'll run the property and give you an idea of what your bonus depreciation would be for the first year. And then you would have an idea, because, hey, if somebody brings in, 20% of that, then they're going to get 20% of that write-off, almost like a dollar for dollar, pretty much year one. So if I'm talking to an investor and I'm like, hey, what kind of taxable event do you think you may have taxes this year? Or how much taxes have you paid already with your paycheck? And if they tell me, oh, I've paid, 80,000 and I probably have another 100,000 or another 20,000 to go, so I'm going to have $100,000 total in taxes. My response would be, well, if you invested that into a deal like this, you would either get a tax return, or you would offset that taxable gain depending on how we set it up for you.
But just on the cash on cash though, as it obviously is small in the first year.
Yeah.
What would that look like instead of the 3% if you just had half a year or a quarter left in the year?
Oh yeah, I got you. Well, it's still going to be 3%, but it's whatever the dollar figure is for this quarter, right? But you wouldn't be closing this thing until November, December anyway. So realistically, your first year
will be 26.
Yeah, it's 2026. It's just you're in the renovation stage. So you'll have some cash flow, but you're going to be accruing a lot of it the first year, and then those big payoffs are going to come off in years 2 through 5.
Right. Thanks, sir.
Yeah. Which is, not uncommon. I mean, once again, because you have to do a renovation on this project, that's why your first year sucks. But very, very common to see that. If you're buying something that's more stabilized, right, where it's minimal stuff here or there, light, then your first year won't stink. And you'll be able to basically roll right into the cash flow model. But the reason you do the value add is because this one probably has a bigger upside to it. Hence the reason of doing it. Awesome. Cool. Well, yeah, any other kind of questions on this at all before we kind of finish up here? And then I do want to make sure, and I'll I'm going to put the link in here for the 3-day networking workshop in Las Vegas. If any of you guys want to come to that, now don't pay. I'm going to give you the coupon, but I don't have the coupon yet. So just maybe save this link, and I'll send it out anyways. But that is the link to the event. And then I will shoot off the coupon code for you all. So that way, anybody that wants to sign up for it, you'll get registered and then you won't pay. And then you'll be set to go. You'll be set to go. Come out and party in Vegas. No, you're not allowed to party. No partying. Yeah, awesome, Michael. Very cool, Bruce. Yeah, I would love to have you all in. Yeah, I mean, we have about 100, about 80 spots. 80 spots. So it'll be great, and then have great networking on Friday and Saturday, workshop and all that stuff too. And so it should be a great couple days out there in Vegas. So come on out, and then we'll be doing these, like I said, probably 3 times a year. The first one here in Vegas, and then Charlotte on the East Coast, and then we'll bring it into Dallas, Texas, next year as well. I wish it was free on the hotel, Gideon. Wish it was free on the hotel. You do have a, you say free on the hotel. There's options there though. The Durango is a brand new resort. I think it's like a year old there. You can stay there, which is 2 minutes from the venue, or anywhere else. Of course, there's a million gazillion hotels. The good news is this: Vegas is getting hit right now. I don't know if you knew this. So hotels are pretty cheap, and they're bringing back like free buffets and like all kinds of stuff. There's been like a 12% drop this year in tourism, and it's attributed to tariffs. And apparently a lot of Canadians go to Vegas and they're just pissed off right now. So they're not coming. And then, yeah, other things too. So who knows? But it's good because now, hotel pricing has come down. They're bringing back all the specials and all that stuff. So, they're giving it. I think they're giving away free drinks at the blackjack tables now, or they started taking that away. I don't even know. I don't drink or go to the blackjack anymore, but I hear that. So awesome. Well, that is the link there, and then I'll get you guys the coupon code. So just save that link, and then I'll shoot it out so you guys know about it. So, and then we will see you all out there. Twyla, I saw that come up real quick on a raised hand.
Yeah, I was just wondering, you were saying that the LP would get, if they put 20% in on the bonus depreciation, they would get 20% of the total out. Is that the same for the GP?
Correct. So yeah, think of it in the sense of, if you guys have $1 million raised and someone brings in 100 grand, they obviously have $100,000, 10% of that total equity. Right. So that's kind of typically, now it does, and it doesn't get split based on like the 70-30 thing. That's not how the taxable amount gets split. It gets split on the percentage of equity in. So like I said, if you have 100 grand in and there's $1 million total equity, that's 10%. Does that make sense?
It does. So if we're looking for a bigger tax write-off, if we do this pre-report on cost segregation, and we are looking for a bigger write-off, then maybe we are going to put more into the deal up front than normal.
Correct, because it's all about the tax write-off, and right. You're almost getting you basically, for simple rule of thumb, right now you're almost getting a dollar for dollar write-off. So if you find out, hey, I'm going to be having to give Uncle Sam 100 grand this year, you would say, well, why would I give it to Uncle Sam when I can take that same 100 grand, go invest it into an apartment building, get a dollar for dollar write-off through a paper loss that I can use for 2025 and rock and roll. And then you can carry that forward too. So if you don't use it all, you can also carry it forward.
Perfect.
Yeah.
Thank you.
You bet. Awesome. All right, everybody, have a great rest of your evening. I'll get you guys out the coupon code, and then yeah, I'd love to see everybody networking in Vegas here in a couple months. But and then remember we'll put in the link for the Saturday call for all of you that want to get on that, and then watch out for the one coming for the brand and kind of mindset stuff for you too. We'll be starting that call too. So cool. Have a great evening, everybody. Chat soon.